together to redefine the next chapter of global finance. I'm Jen Sanasi, here with my co-host Ben Schiller. Ben, nice to see you.
Nice to see you too.
We don't get to see each other in person all the time,
That's
so this
true.
is lovely.
Very nice, thank you.
Yeah, so we do our CoinDesk live broadcast from all over the world. We don't often get to do it from New York City. Talk to me about what you've experienced so far here at the Injective Summit.
Well, it's nice to be home in the home of finance here in New York City, downtown, not far from Wall Street. Not far from our own office, a little bit uptown. So it's great to be here and great to be at Injective. It's a very interesting layer one project built specifically for finance. So interesting to see the collision of DeFi and TradFi here in our own backyard.
I'm really excited at the guests that we're going to have on the program over the next 2 hours. It is definitely people who are building in the space, it's people who are leading in the space, but we also have New York City Mayor Eric Adams joining. We have former CFTC Commissioner Summer Mercinger joining. And so I'm really excited about the different avenues this conversation is going to take as we explore the convergence of TradFi and crypto.
Absolutely, and I think this is really the rebirth of New York City as a kind of crypto center, because in previous times, you know, New York was not the kind of favored destination for a lot of crypto companies. Injective is definitely one that's kind of leading the way back for New York, and New York, in terms of regulations, becoming more permissive, more accepting, more favorable to crypto companies. So I think it's interesting to see a conference like this and a couple of others this week choosing to be here in the home of finance, the greatest city in the world, New York City.
It's interesting you bring that up. Injective headquartered here in New York City. We're hearing more crypto companies coming back to New York after kind of a shaky regulatory environment with the BIT license. And that's what I'm actually excited to talk to Mayor Eric Adams about. He really is pushing to take the BIT license away, make New York a global crypto hub again. And so I'm excited to explore that with him.
Well, there were a number of big companies, I won't name names, that actually left New York a few years ago, specifically because of that BIT license. It's very kind of restrictive, hard to get licensed to operate crypto here in New York. And as we know, just from using lots of crypto services, often there's kind of an exception blanked out if you live in New York City. So here is a reporter covering crypto with some services you couldn't use unless you went to another jurisdiction, which was very strange. But now we're seeing a change again, and Eric Adams was very supportive of crypto. He had a little crypto summit recently at his mansion, just right here at Gracie Mansion. So it's going to be interesting to talk to him about how he sees crypto in the city going forward.
I mean, I listened to his talk at that summit that I think happened about a month ago, and it was interesting to hear him talk about New York. And when I was listening, it really felt like he was trying to position New York, you know, amongst the Hong Kongs and the Dubais, the cities that are really embracing crypto. And given the history, I'm just interested to see how that unfolds. And as someone who lives in the tri-state area, that's really exciting.
It is really exciting. I mean, I still think there are a lot of things that New York probably needs to do. If you talk to crypto companies, they're not completely happy about being here. So, but I think the kind of pros outweigh the cons in terms of being established here. So, interested to hear from our next guest about what he thinks about that.
Yeah, we are going to have Injective CEO Eric Chen joining us in just a minute. But Ben, I think you're going to be moderating something later today. Are you going to be?
No,
you're
so.
just attending?
No, just attending.
Oh my gosh.
Just helping you out.
I'm getting all of my hosts mixed up. You're here joining me. Sam Ewan is going to be joining me later, and Andy Bear.
That's
I know
right.
Andy is on stage.
Andy, I think you were thinking
later
of.
today. I was thinking of Andy. Sorry, Ben.
It's okay.
It's okay. You're here with me. All right, let's welcome Eric into the show now. He's the CEO of Injective, and he's going to get us kicked off for the next 2 hours. Eric, how's it going?
Good, going great. Thank you so much for having me.
Well, talk to us about the summit. Ben and I were just talking about it being here in New York City, this convergence of TradFi and crypto. What are you hoping to get out of the day?
I think what we're trying to focus on right now, especially with a conference that brings over everyone from TradFi to DeFi to like consumer to retail, it's about sparking a conversation. It's about working with regulators, working with institutions, working with layer one blockchains, working with different types of DeFi projects, all coming together on the same table and talk about the future of crypto, the future of DeFi, the future of Injective, and more importantly, the future of New York.
Well, Ben and I were just talking about crypto companies coming back to New York after leaving and having kind of a shaky relationship with regulators here in New York. Talk to us about Injective being based in New York. Talk to us about what went into that decision.
Yeah, I think, like, first of all, like, we never tried to like run away from a fight or, to just stop doing things because it's difficult. For us, it's just about, like powering through and continuously building despite the environment, because we know it's going to turn around. And of course, for us to pick between an easier, building environment or like an easier time to like grow the company versus just being in the financial hub of the world, just being in a part of the bigger market, being able to like accomplish more as a team and also as a company for the whole ecosystem. I think, the choice is very, very clear for us. So that's why we've been building in New York since, like as early as 2019, I believe, and then nonstop from that point on, because we realized that if you want to, have Injective to get to where it is today, you have to embrace all the opportunities and be the epicenter of where, finance happened and where all the opportunities happened.
So we can all understand the attraction of being here in New York. But this regulatory environment has been not very helpful to crypto companies in the past. Are there particular things you would like the authorities here to change in order to make your business, your life easier here?
I think there's certainly, like a lot of things that we would love to see happen from the federal level to state level and also all the way down to city level. We're in very, very active conversation with Washington and also with different types of like state legislators, whom a lot of them are like actually here today with us. And I would say like one of the most important policy or one of the most important policy agenda that we need to focus on is regulatory clarity for different types of crypto primitive, for different types of like blockchain digital asset products, because we just had the Genius bill and that's been just phenomenal.
It's covering stable coins.
Yeah,
yep.
And I think there's going to be more and more of these progressive movement towards clarity, and more importantly, allowing a lot of the companies like us and many others in the industry to have a very concrete next step on like how to approach with regulators and how to serve the product to the greater U.S. to make U.S. the crypto capital world, and at the same time, New York the crypto capital of the world.
Go New York.
Yeah.
Go New York. Eric, it wasn't long ago when the folks sitting in the chair on your side of the interview were saying we can't engage with regulators. We're trying to engage. We're trying to get some kind of clarity, and it's not happening. It was just a year and a half ago, and it sounds like you're very positive about the conversations that you're having with regulators at every level, like you've just said. Is that a fair assumption? The conversations have been positive and productive? Yeah,
absolutely. So I think never before have we had such a really amazing presence and amazing engagement down at the Capitol Hill, talking with all different lawmakers, policymakers, and their respective teams on all the exciting things that they're working on. From back in the days, like the initial draft or like the Bitcoin Strategic Reserve, etc. All these things really point to like a never before friendly environment for us to engage in positive conversation with the regulators, and never before have we had like a regulatory agency that are like finally willing to provide clarity, to finally work with like industry leaders and different companies and listen to them to come up with sensible lawmaking.
Any preference for mayor? Any preference for mayor?
That I'm very, very much biased right now, so we'll just leave it at that.
Okay.
All right.
I think you speak for many when you say that. Yeah.
For folks who are watching at home, who are just hearing about Injective through the Injective Summit, just give us a brief overview. What is Injective's vision and mission?
Yeah, Injective's mission through and through has been, democratize the access to finance. Whether it be, the most basic access to finance when it comes to payments, when it comes to, savings, when it comes to, just having a secure self-sovereign custody of your assets, all the way down to just being able to access all the extremely advanced financial instruments that really, lifts people out of their, existing like kind of like financial situation, that really allows them to truly invest like, some of the more sophisticated investors out there, and those who are like ultra high net worth individuals who are, like just privileged by all the wealth of instruments that they have access to. And for us, it's about building every single one of these components and every single one of these infrastructures, one by one, to be able to serve the users in a completely permissionless and low barrier way. And for us, it's about building the central limit order book for an exchange infrastructure. It's enable access for like perpetual futures and different types of like derivative product. And more importantly, it's about tokenizing as many of the assets in the real world as possible to be able to bring that in front of the consumer's platform and to deliver it to them in like a low friction way.
So Injective is a relatively new blockchain that's built specifically for finance companies. Why should a company choose to go with Injective rather than, say, Ethereum or a number of other competitors?
I think it's completely welcoming for like these projects to go multi-chain, and I think that they should because they need to be next or close for vicinity with all these assets. And this is also why we provided a lot of these bridge solutions and interoperability solutions to make sure that if they were to only choose one place, Injective is a home for them because they're not missing out on all the lack of like interoperability or like the lack of adjacency to assets because we resolved that all that for them. And I think the most important thing and the most important sell we have for builders is that we have the unified liquidity environment, which means that all the liquidity is unified under one place. And they can contribute to it, they can benefit from it, they can earn revenue from it, and they can basically serve their user with the same confluence of liquidity. And on the other hand, there's a lot of like built-in modules that doesn't require them to rewrite a smart contract. That doesn't require them to constantly update their library contracts like Ethereum and other places. Where the module is a very commonly shared common good, where you can build an application without writing a single line of code, at least as a human. And also, I think the most interesting part is that a lot of the very, very advanced like DeFi products and financial products doesn't require you to write a smart contract on top of Injective to make it happen, because you can just configure our existing modules to serve your user base.
Cool.
Eric, so many of the builders I talk to are really motivated by financial inclusion, financial equity, and you just mentioned that. I'd love to just hear, why that's so important for you. Like, what's driving you when you show up to work every day?
Yeah, I think there's a lot of reasons. I think, like, honestly, at the end of the day, like, who doesn't want the world to be more fair, more equitable, and also everyone to have like equal level like financial access. And just tossing like my personal opinion aside, I think for the market to be efficient, for the global financial market to be really flourishing, you're going to need to bank every single person and have them joining in on the overall financial activity. The bigger pie makes the whole world better. And honestly, for me, it's like I get to see like a lot of these like pitfalls and issues with financial inclusions very, very early on, because I didn't grow up in the U.S. During my early days. I lived in Hong Kong, which was still like a very much of a financial capital of Asia. But at the same time, I realized everything that was like disruptive or like everything that was interesting that was happening within the financial world, the tech world, or like just in general the information flow, it's almost always delayed by like half a year to 2 years. And to this day, I remember very clearly when I was in Hong Kong, I think earlier this year, they still haven't gotten access to like Apple Intelligence yet. And it's like, for us as Americans, we've had the privilege of using it, or like a lot of the ChatGPT products, to be honest, for like years now, where it's like it's almost such an ingrained commonplace in our lives. But just imagine like what everything else that folks in Asia, like folks in like Africa, or like other regions are like missing out on, or like being charged a very hefty premium to access what we consider to be commonplace.
Right.
I will say, even in Canada, I'm from Canada, which is not far from where we're sitting now, and if we want to send money to each other, we still have to email it, which is totally crazy.
That is crazy.
All right, Eric, this is a one-day summit. Talk to us about what you're looking forward to the rest of the day.
I think there's going to be a lot of very, very exciting talks, exciting conversations, exciting keynotes, and I think I'm very much looking forward to Mirza's, talk session where he talks about all the alpha that's happening on Injective. Honestly, I was a little bit, like salty about the fact that like he took away like all the exciting launches and stuff like that, or like all the really, really cool like announcement that he's going to do over at his session. And then for me, it was like, like I only get 2, come on.
Well, he's going to be on our programming later, so we'll get to hear the alpha from him. But since you're feeling a little bit salty about it, do you want to give us some alpha before we let you go?
No, I think everyone should stay tuned to the announcement. I mean, like, he really spent a lot of time like preparing it to make it perfect, so I don't want to spoil the surprise in any way.
Eric, thanks so much for joining us, and we'll see you around the conference.
Thank you.
That was Injective Foundation CEO Eric Chen. We are going to take a quick break. We'll be right back.
Good job.
welcome back to CoinDesk Live. Our next guest formerly served as a commissioner of the CFTC, where she played a key role in shaping federal regulatory policy in financial markets. Now she's at the helm of the Blockchain Association as its new CEO to continue representing the crypto industry in Washington. Summer Mersinger, welcome to the show.
Thanks for having me today.
Of course, thanks for being here. Now, the last time we spoke, you were a commissioner at the CFTC. Now you're the CEO of the Blockchain Association. Talk to us a little bit about what you hope to bring to the new role.
Yeah, absolutely. The great thing about the Blockchain Association is it's a unifying voice for the crypto industry in Washington, D.C., and the objective is to get policy in place that's pro-innovation and can make the U.S. the global leader in the industry. And I bring a lot of experience both from the from congressional, my time working in Congress, and also my time at working for a regulator. And my hope is I can bring that experience as we work towards getting legislation through Congress, getting it implemented, so we have a clear regulatory framework for crypto in the United States.
So it looks like the Genius Act is going to go through. Everyone's very excited about that, stable coins, and now a lot of discussion around the market structure bill, the Clarity Act. What are you looking forward to in terms of getting that across the line? And why do we need a market structure bill?
Yeah, absolutely. I think there's a couple of reasons, but probably the biggest one is, that we want to make sure the U.S. is a place where the industry can thrive, where innovation can grow, and the U.S. can remain kind of the global leader. It is global leader in most markets, and we should be the global leader in the crypto market as well. The Clarity Act brings a lot of framework that's necessary to cryptocurrency trades and offerings, and right now there's just a lack of regulatory clarity. This will allow companies to come in, bring their products, bring their innovation, and thrive here in the U.S. It also provides a lot of safeguards for those who want to invest in crypto, and that's really important as well.
Right.
The market structure legislation, as it sits now, really carves out a big role for the CFTC. Yes. Given your experience at the CFTC, talk to me about your interpretation of the legislation and how you think the CFTC, if you think the CFTC as it stands now, can act on what's in legislation, or if something needs to change.
Yeah, absolutely. Well, the CFTC is really well positioned to be this regulator of the crypto spot market. It already has anti-fraud and anti-manipulation enforcement authorities, so they're already monitoring these markets. There have been futures products that have traded on registered exchanges since 2015 with Bitcoin and Ether. Yeah, so the agency is very well suited to take over the regulation of the cash market for crypto, which is what Clarity does. And it really gives a registration kind of category for crypto exchanges, market participants to come in, to register, to come under a regulatory framework. And the idea is you have a safe place for consumers to go to buy and sell crypto, because the interest is there. People want to be involved in these markets, and we should offer a place that they can go and have safeguards.
I mean, people complain obviously about a lack of clarity in the crypto market, but some people say, well, it comes down to kind of split nature of the regulatory system. We have all these regulators, the SEC, the CFTC, and many others. Wouldn't it be better just to have one crypto regulator rather than having the CFTC and all these others?
I hear that argument a lot, and certainly when I've traveled abroad, people have asked, why do you have such a fractured, regulatory system for financial services in the United States? And I usually respond, well, the United States has the greatest, most liquid, vibrant markets in the world, so maybe we were getting it right. And so I do think there's a role for different regulators. Everybody has their expertise. And so, yeah, it may seem like it's a little bit divided, but it works. With the SEC and the CFTC, they've worked together before. They know how to regulate side by side, and they will do great with the crypto markets as well.
Do you think we'll get market structure legislation this year? I know the deadline was at the end of the year. I think that this morning I saw a story, one of the senators is saying maybe we're aiming for September. Some people are hoping before the August recess. Are you thinking it's going to happen anytime soon? Yeah,
I think the House will definitely get clarity through before the August recess, but the Senate is now just kind of getting started. They've got their principles out from Senate Banking. Senate Agriculture is starting to look at language as well. So that's, I think, probably where the September timeline comes from, is what the Senate is working on. But I do think they could get market market structure done, the two sides can work together and have it done in time for, into the fall.
And are you expecting a bipartisan bill? I mean, crypto's become quite a Republican thing, while the Democrats are kind of seen as against it. Are you expecting more bipartisanship in the future?
Yeah, absolutely. I think that crypto has actually historically been a very bipartisan issue, and I think we've seen that play out in the vote with the Genius Act, in the votes coming out of the House Financial Services and House Agriculture Committees on clarity. Right. There is bipartisan support. I think a lot of people recognize that it is so important to have a regulated, safe space for the industry to operate, and especially for members of Congress and senators, for their constituents to be in these markets. And so I think that's recognized across the political spectrum, and it kind of brings the two sides together.
So we know the CFTC commissioners, most of them are stepping away at some point this year. We're hoping to get this market structure legislation and more commissioners in at the CFTC. What would you urge them to focus on?
Yeah, I think the first thing they want to focus on is making sure that the current markets, the current exchanges are able to keep functioning as they have. We don't want to disrupt the markets as they stand. We want to make this as seamless as possible. So getting in, trying to make sure they've got some plans in place to provide some, maybe it's some relief right away, whatever needs to be done to make sure that the markets can continue to operate as they have, while they adjust to the new regulatory structure, and while the various agencies are writing rules. Because rule writing does take quite a while. It could very well take more than a year to get the rules done.
Right. I'm just wondering about, there are a lot of lobby groups now, crypto lobby groups. The Blockchain Association was one of the original ones with your predecessor, Kristen Smith. But now there are a whole sort of new generation of think tanks and lobby groups. Is it getting a bit crowded in Washington, all the think tanks and lobbyists?
There's room for every voice in Washington. This is not different than a lot of industries where you see multiple groups and associations and think tanks come up around an industry. I think it just shows that the industry is maturing and has recognized how important it is to be involved in the conversations and be in Washington and in the room when they're working on legislation. So I think there's room for everyone at the table, and the more people supporting crypto and talking about the importance of having a regulatory framework, the better off the industry is.
Great.
Summer, thanks so much for joining us. It's always such a pleasure hearing your insights.
Thank you for having me.
That was Blockchain Association CEO Summer Mersinger. All right, if you're just joining us now, I am Jen Sanasi. I'm here with CoinDesk's managing editor, Ben Schiller, and we are coming to you live from the Injective Summit in New York City. Ben, we've had a few conversations so far. Things are starting to get kicked off here. People are showing up. I'm seeing crowds behind the camera.
Yeah.
Talk to me about what you're taking away.
I'm feeling the energy. It's just good to be, as I said earlier, it's great to be in New York City. It's great to be in this historic venue downtown. We're right by City Hall, and we've got some great guests here. We're about to have another one in a second, so I'm pretty pumped. Yeah.
We just talked to former CFTC Commissioner Summer Mersinger about crypto legislation that is currently making its way, progressing. We have stablecoin legislation, we have market structure bill. It seems that everyone I talk to lately feels very positive about both pieces of legislation passing soon. Is that the same thing that's happening with the people you're talking to?
Well, we actually had a report by our colleague Jesse Hamilton, which was slightly more skeptical on the chances of the Clarity Act, that's the Market Structure Act, passing Congress in this Congress or in this year. So we'll have to see how that plays out. As our previous guest was saying, the House is easier than the Senate, so we'll have to see how much genuine bipartisanship there really is in the Senate for market structure legislation. So.
It's really interesting. There are a lot of folks who are thinking if market structure doesn't pass this year, it might not pass because there are going to be different priorities going into next year. And we talk so much about both stablecoin bill and market structure bill bringing more clarity, more regulatory clarity. But I don't hear a lot of people saying that, if this doesn't pass, it gets a little bit murky because now it goes back to the CFTC and the SEC to create their own rules, which could change.
I don't think anyone thinks we're going to go back to the kind of dark days of Gary Gensler at the SEC, kind of proclamating what is and what isn't allowed. I think we're way beyond that. So even if we don't have that comprehensive legislation that everyone wants, we're still in a much better place than we were a year or 18 months ago.
Yeah, that's true. All right, let's get to our next guest now. Joining us at the desk is Head of Tokenization at Galaxy Digital, Thomas Cowan. Hello.
Hello, hello, how are you?
I'm doing great. How are you doing?
I'm good, thank you guys for having me.
Thanks for being here. I know Ben was telling me that you published an op-ed on CoinDesk today.
It was actually serendipitous because Thomas and I have been talking about an op-ed for a little while, and he was very kindly put a great piece together. So check that out. It's all about the future of tokenization. It's all in the piece, and we've had some kind of obvious things that have been tokenized, but Thomas was looking at the kind of the future of tokenization, which assets might be next. So it's an interesting topic.
I know in the piece you say stablecoin is kind of like laying the groundwork for what comes
just the
next.
beginning.
Everyone's very excited about stablecoins. Of course, we were just talking about stablecoin legislation, but where do we go from here? Talk to us about that future.
Of course. So, I mean, Galaxy is uniquely positioned in that we sit between, TradFi and crypto and DeFi, and so through that lens, we're able to look at the tokenization space and see really where those key trends are happening and what we think will happen over the next 6 months to a year to 2 years. And as you mentioned, stablecoins really have found product market fit. They're used for cross-border payments, overseas dollar access in emerging economies, and then also as a trading pair for Bitcoin, Ethereum, and other digital assets, right? So stables, that ship has sailed, and we're excited to see that growth continue. And then since then, we've really seen over the past year or so a focus on tokenized money market funds, BUIDL, Benji, Ondo, and the like, and have shown that there really is demand for the risk-free rate on chain. And so your question is, what's next? Where do we see the world going? And at least at Galaxy, we see kind of two main focal points over the next year or so that we're most excited about. The first is on-chain debt, which is pretty broad and we can get into, and the others is tokenized equities. And I'm really excited about that second one because, 6 months ago, a year ago, if you would have asked me when we're going to end up with tokenized stocks, I would have said, many years down the road. But because of the change in administration and the interest that we've seen from the crypto task force, that timeline's brought forward substantially sooner. We announced about a month ago that we're in the process of researching how we would tokenize our stock. And in many ways, for us, that's the end of a long journey for Galaxy in the industry to think about tokenizing stocks. But for TradFi, it's just the beginning. And so it's a fun duality and highlights just how long we have to go. And so that's really, those two buckets of on-chain debt and equities are really where we're focused over the next year or two.
Just in terms of equities, I mean, it's already pretty easy to trade a stock. I can go on my Schwab account or whatever account. Why do I need a tokenized equity? Why does Galaxy need tokenized equity?
Absolutely. So it's easy for you to do so. I think if you look at the overseas market and people looking for being able to access the NVIDIA stock that everyone's talking about, that is a huge unlock to be able to give people access to the US capital markets at a global scale. So that's one. I think also, while it's quite efficient for us on the front end to be able to go on Robinhood and buy a stock, if you look at the back end system of what's happening, you have something like 12 or 14 intermediaries in some cases, and the settlement time can be comparatively long. Whereas once everything is tokenized, that information associated with that equity and the stock itself can be combined into one. And then you just have a vast efficiency that can unlock a lot of opportunities in the longer term.
And will we see those efficiencies as customers? I mean, are we going to benefit from this?
I hope so. I mean, if you look at kind of the arc of different technological movements over time, that S-curve, over and over and over, you see those benefits trickling all the way down to the consumer, and we expect to see that. The timing is anyone's guess, and it's always hard to make a prediction, especially in crypto. But I do think that in the long term, we'll absolutely see that come down to not only consumers in the US, but as importantly, people overseas as well.
You talk about those 12 or 13 intermediaries, and there's a lot of money being made there. Talk to me about what happens to that and how those intermediaries still play the game, or is there not a place for them in this future we're talking about?
I think there absolutely is a place. I think, as we've seen other technological movements and disruptions, people always kind of morph and evolve to be able to find a new role, over and over and over, whether that be the internet or Uber or whatever it is. You see people evolve and adapt and find new ways to monetize, their services and be able to provide services to the end customer. And I think this is no different. And in the end of the day, it will create different benefits, but I think I really think of this like the iPhone, right? Like initially we saw the platform and said, wow, this is transformative. But then you fast forward a year or two when they had the App Store, that's when people really got that unlock because you had a second set of developers. And it's the same thing here. We're seeing the power of tokenization today, but it's just the very beginning of where we think what is possible can really unlock across different parts of the ecosystem.
So I think it's something interesting you said there was that we tend to think of tokenization as products on the end or equities that we can now trade. But you were getting at this more substantial point, which is about the plumbing of Wall Street, really, and a series of kind of processes on Wall Street that are going to be changed by tokenization. So it's not so much what the customer sees, it's more what the company is doing internally. Would you say that's right?
Yeah, in many ways I think of it as what encryption does for the internet. Where the internet was quite useful, starting with ARPANET, but really what made it unlock was the fact that we were able to create encryption that enabled the Amazons, the Netflix, the Googles to really grow, because you finally had a tunneled private pathway to be able to put your credit card number or personal information in. And tokenization will do go through a similar progression, where it will become the back end of a financial system that right now we may not know super well, but really what we're going to see is that vast amount of information will just be compressed to the back end, and it'll just work much faster, better, cheaper than what we see today.
Interesting.
You mentioned tokenized debt. We don't have a ton of time, but quickly tell us a little bit about that. I mean, what does that unlock for end users?
Yeah, so the thing that I like about focusing on the debt market specifically is it's less standardized than equities, and so what it means is there's comparatively less transparency, there's more inefficiency, the distribution isn't as wide, and so what that means is that's kind of a perfect recipe for tokenization, because you can have the transparency, you can have the secondary liquidity, you can have the collateral mobility that we're beginning to see in different parts of the market in a way that previously we haven't. And so that's really where we're focusing on at Galaxy over the next few months. We'll definitely see a few announcements there where we're looking to demonstrate not only the utility earlier that we mentioned of equities, but also of debt, and really what we see that playing out in the longer term.
What's next? I mean, we hear people talk about tokenized real estate. I think Galaxy did something with a tokenized violin at some point.
We did.
What happens next? Does everything just get tokenized, and do we need to tokenize everything?
I think the key focus should be, where's their clear utility? Where can we actually match the demand today? And then over time, move the ball forward, right? Like, we shouldn't tokenize things just to tokenize them. We should really step back and see where's the pain point, where's the demand, where can we leverage the technology to make things better, faster, cheaper. If it doesn't boost revenue or cut costs for our clients, we shouldn't tokenize it, right? And that can change over time. But today, where we're focused is stables, money market funds, on-chain debt, and equities, and we really see progression happening across all four of those in the next year or two.
Thanks so much for joining the programming.
Of course.
We'll see you around the rest of the day.
Thank you, guys.
And check out Thomas's op-ed on CoinDesk. It's called The Future of Tokenization, or What's Next for Tokenization.
Thank you both.
Thank you.
That was Galaxy Digital Head of Tokenization, Thomas Cowan. All right, we're going to take a quick break. We'll be right back.
just go back.
You're watching CoinDesk Live, and we are coming to you from New York City, where the Injective Summit is underway. I'm Jen Sanasi. I have a new co-host right now. Andy Bear is joining me. Andy, welcome to the desk.
How are you, Jen?
I'm doing fantastic. I saw you were on a panel just now.
Yep, we failed at having a lot of arguments. It was a pretty smooth panel, so I don't know.
A smooth panel. I like a smooth panel.
We'll try again next
Maybe
time.
we can have an argument right now.
Well, let's try.
All right. Let's welcome in our next guest for this special edition of Markets Daily 21 Shares. Head of U.S. Business, Federico Brocate joins us now. Hello.
Hi, nice to be with you both.
Nice to have you here. Andy's looking for an argument, so I apologize.
Let's get into it.
All right, let's just talk about what's going on in the markets this morning. On Markets Daily, we like to talk about the markets of the day. Last I checked, Bitcoin was at around $107,000.
Yep.
Kind of remaining steady amongst all of the geopolitical tensions we've been experiencing over the past month or so. Talk to me about how you're looking at Bitcoin.
Yeah, look, to me, this is a sign of the tremendous maturity that we're seeing from Bitcoin in the market today. We've been talking about Bitcoin as this macro kind of uncorrelated asset for the last 5 years, let's call it, and it's finally kind of maturing and happening right before our very eyes. You know, typically in the past when we've looked at Bitcoin's price performance around some of these geopolitical events, the first few days, let's call it the 3 to 7 day window, tends to show a lot of downward pressure on Bitcoin prices as investors are fleeing away from risk on assets. But recently what we've seen is actually Bitcoin staying steady in that 100 to 110 range. And I think there's a few things that we can attribute to that. The first one is the institutional buyers that are coming into the market for the first time. And these are buy and hold investors that are taking up as much of the liquidity that they can from Bitcoin markets and not trading as actively around some of these events. The other thing we're seeing, is a lot of support from Washington, D.C. And even if it's regulatory support for crypto markets broadly, and it's not necessarily just specific to Bitcoin, that certainly trickles into investors' confidence in the asset, which is definitely the flagship product, if you will, from a digital asset perspective today.
I'm a little surprised. I'm going to try to get an argument started.
I support it.
But it's going to be mild. That usually, we've seen inflows now several days in a row, mostly in Bitcoin, mostly in the United States. But in that trading range, except for Sunday, has been 50 straight days of a 10% range.
Yeah.
There's not a lot of momentum to attach yourself to with Bitcoin's price. I'm a little surprised that there's that much inflows. Is it, as you say, new money coming in, or is it ARBs versus futures, or is it money to support options trading? Where do you think those ETF holders are stashing these products?
Yeah, no, it's a great question, and actually one of the questions that I love speaking about the most. If we look at Bitcoin ETF flows from the U.S. alone this year, just year-to-date numbers, we're somewhere between 12 to 13 billion in net new assets that have come into the market. If you add to what we saw in 2024, we're almost reaching $50 billion of organic flows coming into Bitcoin. And these ETFs, all they do is buy the underlying asset. So this is directly impacting the number of investors that are participating in this market today. To us, this is a sign, yes, there hasn't been maybe over the last 30 days this tremendous upswing upwards from the 100K price level. But if you zoom out, Bitcoin is still returning double-digit growth on an annual basis or on a year-to-date basis. And when you compare that to other flagship risk-on indices, whether it's the S&P 500 or a NASDAQ index, this is still far above anything we're seeing in the rest of risk assets today.
Andy, that's an interesting point you make. I mean, I'm also a little surprised, but for a different reason. A lot of the headlines are
Maybe
saying
we can start an argument.
are saying that more and more corporate treasuries
Yes.
are coming to fruition. People are
Yes.
buying Bitcoin. Metaplanet just surpassed Tesla as the 5th largest corporate holder of Bitcoin, and yet we see the price remain.
That's right. It hasn't spurred a price. It hasn't spurred a price drive. There just hasn't been momentum to crack through that all-time high so far. I do appreciate the point, though, that even staying pat and holding that range for such a long period of time, there had to be buyers, not just sellers, right?
100%.
And so every time you see a price go up from 102 to 107, something's been behind that. So we'll see how much longer this range can hold. Yeah. You have a lot of filings out there. We know you can't talk about them. The SEC is expected to respond, some of them as early as next week, right? Who will be the first owners of these new ETFs in some of the other names that you filed? This is almost a different asset class than Bitcoin, right? Where do you expect the first few major holders to be?
Yeah, it's a great question, and I think at 21 Shares we have a little bit of hindsight benefit here based on our European business.
Yep.
So in Europe we have over 45 different ETFs tracking over 25 single assets, and we've been able to see how adoption shifts from the moment the product is launched all the way to, let's call it 2-3 years down the road. Right. Typically, in our hypothesis for the US market going forward will be first-time buyers or early buyers of these products will be crypto-native or crypto-adjacent individuals that have assets inside of a brokerage account, a tax-advantaged account, and they actually want to continue contributing parts of their portfolio to crypto, and ETFs happen to be a fantastic way to do that in a cost-effective and secure way. Over time, as you continue educating the market about the underlying assets and the value propositions of each project, that's when you're going to see these new joiners or these newcomers to the market, whether they're advisors, whether they're RIAs, or they're individual investors that might not be as crypto familiar as others. And that's really where, having a strong story to tell together with the ETF is a really effective way to bring capital, but you do need to have that underlying narrative around what the asset is doing, what the use cases are, and what the ultimate value proposition is for a portfolio.
When do you anticipate those newcomers to come, and what's going to be the catalyzing moment that brings them in if they were still sitting on the sidelines?
Yeah, I mean, look, I'll pick Bitcoin as an example of what we've seen in the US and what's bringing in newcomers now. The first year of flows for Bitcoin was really all driven by retail investors in the US. What we've been seeing this year now, since January onwards, is really a big, massive pickup in advisors across the country that allocate assets on behalf of their end investors. And these are institutions that typically act as fiduciaries. They need to perform lengthy due diligence processes on these products. And the fact that we're seeing this uncorrelated, or let's call it less correlated returns for Bitcoin versus other risk assets is certainly that catalyst that you mentioned that is bringing more professional investors into the market today.
Market observers are going to be watching this new stampede of new products hit, presuming that we get approval from the SEC and successful launches. What should people look at? They'll be inundated with information about inflows, but should they be looking at volume? Should they be looking at impact on price? What kind of things are going to lead people to believe that certain or all of this new class of digital asset ETFs is successful right out of the gate?
Yeah, look, I think oftentimes people use flows in the ETFs as a bellwether for how successful these products are. The reality is that ETFs typically take 3 to 5 years to scale to a meaningful position. If you look back in history at the first ETFs that were ever launched, SPX, or SPY rather, was the original ETF, and that took 2 decades to take off.
Right.
Obviously, timelines are compressed now. ETFs are the investment vehicle of choice. So typically what we look at from an issuer perspective is, what are the flows, what are the volumes, what does the trading activity in these products look like? Is there a lot of client activity, or is there more buy and hold long-termism in these products? And ultimately, based on market caps for each asset, we'll judge the success based on flows.
I want to talk about this letter that you joined Van Eck and Canary Capital in sending to the SEC. It is calling for the reinstatement of first-to-file principle for ETF approvals. As we saw with the Bitcoin and ETH ETFs, a group of ETFs were approved at the same time. Talk to me about what prompted the letter and what a first-to-file principle would mean for people who are purchasing ETFs.
No, it's a great question, and it's something that we're definitely very passionate about at 21 Shares. When it comes to first-to-file principles in the ETF industry here in the US, we believe this is a large reason that we've seen so much innovation from a product perspective in the US market. Issuers that come up with new ideas, with new creative ideas, and are able to put them in clients' portfolios in a really meaningful and impactful way have been rewarded by being the first to file and being kind of having a first mover advantage, if you will. Obviously, with the Bitcoin ETFs and with the Ethereum ETFs, the SEC was challenged with a first of its kind moment, right? Where all these different filers or issuers wanted to come to market with a brand new product that really hadn't been seen in the market up until that point. So I think they took a logical approach, which was to batch all of the issuers together at once. And now that we are in a more settled state, let's call it, from a market perspective, we want to see that first to file principle come back, because we believe it's going to spur more innovation, not just from firms like 21 Shares, but from all of the industry participants. And ultimately, the people that benefit the most are our end investors who are able to take advantage of some of that innovation.
Do you think that as the ETFs come out and you have broader, ownership base, and you have some of the actual physical assets locked up in trust for the ETFs, that volatility would continue to come down in some of the alternative names as it has for Bitcoin?
Absolutely, absolutely. To restate some of the flow numbers that we've seen. 50 billion in flows into the ETFs alone. Those are primarily buy and hold investors.
Right.
Outside of
It's
those
almost
select
like
hedge funds.
5-6% of all Bitcoin is held in ETF trusteeship.
And then you add the corporate treasuries that are adding Bitcoin to their balance sheet. That's another 2-3%.
Yep.
And as that grows, and then you add governments and sovereigns on top of that, and all of these new buying bases that are actually long-term investors. We're expecting not only to pass the all-time high numbers of long-term holders of Bitcoin, but to actually reach the very top of that scale.
Federico, thanks so much for joining us here at the desk. We hope you enjoy the rest of your day.
Thank you. Thanks for having me.
Nice to see you.
You too.
That was 21 Shares Head of U.S. Business, Federico Brocate. And Andy, thank you. I think you're going to be joining me later on today.
I can't wait.
It was a pleasure chatting with you.
See you in a bit.
All right, we're going to take a quick break. You want to just do the intro?
Sure.
No, you have to say your own. Hello, you are watching CoinDesk Live. I'm Jen Sanasi.
I'm Ben Schiller.
And-
Joining us live from the CoinDesk thing. This is Ben Schiller.
I'm TJ Miller. I'm the funny one here.
All right, we are coming to you from the Injective Summit in New York City. We're here with actor and comedian TJ Miller. This is TJ Miller.
This is so
This is Ben
exciting.
Schiller. It all kind of rhymes.
It does
It does kind of rhyme, right? TJ Miller and Ben Schiller.
I'm here
All
to
right.
bring low energy DeFi kind of vibes.
All right. For the low energy DeFi vibe, I think you got to bring it down a few notches.
These guys. I'm so excited to be here.
I'm so happy that you're excited to be here.
Tell me all about it.
You tell me all about it.
Well, it's really fun. Injective, this is like an incredible, don't you think it's an incredible venue?
It is stunning.
We're in like an old bank or something. I don't know, it feels like there's going to be an Ocean's 11 heist at some point. At some point.
Maybe there is right this second.
Yeah, it could be.
Maybe.
It could be.
Anything could happen.
Yeah, so I'm excited to be here. I'm speaking, and it's just really interesting to see this particular world of blockchain because my wife is a Bitcoin maximalist, and she made sure that I would say that on air. But we are sort of more involved in the Bitcoin space. And then as far as blockchain goes, you know, I was the first comedian to do, dirty word here, to do an NFT comedy special and, you know, have been interested in the space for quite a while. And I'm kind of trying to figure out how to be both a face in this space, that rhymes also,
It sure does.
and also to try and bring sort of wider adoption and appreciation of this technology sort of culturally, because that's just not happening, and it blows my mind how few people from my world are interested in this and want to talk about it and bring it into their projects, because the amount of people besides myself who are doing that is zero.
Well, that's interesting. There was a time
A
when
big, fat zero. Which is my camera? This one?
the one with the red light.
I don't think that's true. A big, fat zero.
Well, tell me about that, because there was a time,
That
TJ.
isn't, that's not my camera?
The one with the red light is your
Okay.
camera.
Is what you're saying. Okay, go ahead.
There was a time.
Ah, these guys love it.
Oh,
Look
yeah.
at that. I'm doing camera
He's
jokes.
just out here for the laughs.
These guys.
There was a time when there were more
This is a
celebrities that were outspoken.
situation.
Okay. Okay.
Go ahead.
Thank you.
You are the
Thank
central
you.
focal point.
I know.
But it's the two of us.
I
This
know.
is the
And
central-
Ben. Okay, here we go. So there was a time
Is that my
when
camera?
celebrities were.
That's
no,
it.
the one
Right
with
there.
the red light.
That's it right there.
All right.
Go ahead.
Why do you think more celebrities aren't
I don't know. You know,
talking about their crypto investments? Because I think that they are investing in crypto, but they're just not talking
they're
about
not
it.
talking about it. But I also think if they're investing in it, it's just because they think they're going to make money. So I think the real paucity that we find with of people like me is I know about it, I'm passionate about it, and I think it's fascinating. And I want to talk to people about it. Within the Bitcoin sphere, you want people to understand it before you're telling them to invest, but you want to, orange pill them. You want to try and help people understand it first and become fascinated by it and kind of. But what I've been saying is that to understand, let's just say blockchain, right? It takes about 50 hours, 50, of study to really understand it. And it's really hard to get people to study after they've graduated. Some of us didn't. I mean, some of them, which is my camera, some of us didn't graduate.
So it's interesting you mentioned about orange pilling. That sort of implies some kind of cult that you need to be sort of inducted into. Isn't that sort of a bit of a problem for Bitcoin crypto generally, that there's kind of this closed group of people over here and then there's everyone else? And what role does comedy have in closing that gap, maybe?
And that is a great point. A great point. And it's true that, right, and I even started saying we've got to stop saying, it's a great point, we got to stop saying orange pill, the sort of cult, we were just talking about this, the kind of cult-ish kind of feeling that people get when they hear that even blockchain is kind of, it's a bit of a, we know about this thing and we want everybody else to, but you wouldn't understand it. And this is our clubhouse. And that doesn't work. The other thing that I brought up to Jordan, who's like sort of one of the Dogecoin guys, is that we need people to understand that it's like, it's here. It says the future starts, it's already here. Blockchain is already here, it's already happening. And so it's like trying to explain the internet to people in 2008. It's the people that don't really want to hear about it or don't want to get involved in it or anything. It's just hard to let them know that this is going to be an integral part of everything. This kind of is how everything is going to work. And I think you're right, absolutely, that the less we make it clubhouse or culty or any of that stuff, the more people will go, okay, because we all want people to learn about it, be fascinated by it, and then understand it. But it's a tough thing to do. And that's why I want to incorporate, I was talking to somebody about, by incorporating Bitcoin and blockchain and everything into television series, movies, music, whatever it is, to sort of push cultural adoption, you also want to do it in an ancillary way. So it isn't a documentary about Bitcoin, because everyone's going to go, I heard about Bitcoin. It's not a series about blockchain and the different way. It is a movie about this that involves Bitcoin. Right. It is a company, maybe it's The Office, but they work at a blockchain, company.
Right.
And I think that's the only way that we can really get people to accept that it's already here.
But I suppose the kind of specificity, I don't know if I'm saying it the right word.
I think you did a great job saying that.
The specifics of crypto culture are probably what make it funny, though, right? It's like these bros getting rich, hilariously rich, while
Buying
other people aren't, that kind of thing.
Lambo's the worst car. But I think you're right, and I think satirizing it is sort of the best way to do it. And that's kind of my specialty, too. I was on a show called Silicon Valley, and we were lampooning specifically Silicon Valley, that culture.
Such a great show, yeah.
Yeah, and so we want, it's something like that, but it's talking about blockchain and everything decentralized. DeFi, Wi-Fi, DogFi, dog with hat, doggy dog, just all dog-related stuff.
I almost want to give you like 30 seconds to say all the dog-related things you can, but I
want
won't.
to.
I
What
won't.
else we got going
So,
on?
no, talk to me about this. I know that you perform at clubs all over New York City. We're in New York.
I don't want you guys cracking up over there.
You got to be serious about your jobs.
Go ahead.
You really focus in your set on Bitcoin education, which I think is really interesting. And you give people Bitcoin at your shows. But the reception is not, I watched a few videos and people are kind of, they're not.
That. I gave Bitcoin on Venmo to a friend's mother, and she just didn't accept it. She thought, it came back to me like 30 days later, and she just thought, she still is like, this isn't real, you know? And so in my set, doing stand-up, I kind of try and joke about it, but then tell people, no, this is real and you should learn about it, and it's fascinating, and it's just really, really hard, and I think that's why all of us, I think that's why we love the community here. Like, it's so fun to be in a huge, you know, summit where everyone you talk to knows about all the same stuff and is passionate about all the same stuff that you do. But breaking out of, we talked about this, breaking out of that echo chamber is like so difficult. And that's what I'm really focused on. I just think it's trying to get people to get excited about it. And one of the things that I've been doing is trying to steer away from, this is going to make you rich, or this is, and the other thing that we talked about was, on the cover of every magazine, metaphorically, that is blockchain, is Celsius, FTX, the Hawk Tui meme coin, which she didn't even, that was not her fault. But it's all these kind of scamsters, it's fraudulent, we're rallying against that, and the best thing we can do is have people like myself that is a recognizable face, but also like the two of you, people that are knowledgeable but approachable and trustworthy. And that's why calling it trustless is a real fucking am I allowed to curse on this thing?
Well, you just did.
Well, fuck it. I love Injective, the Summit, the host of CoinDesk. I love CoinDesk and Cointelegraph. You and I have a little bone to pick. You still
We don't talk about Cointelegraph on this
broadcast for the coffee that I bought you. Sorry.
So what is the message if it's not like get rich?
What?
What is the message if it's not get rich?
Get on board. Just get on board with all of this because it's coming, it's here, and it again is wonderful. That's what I keep telling people. It's like, it's really an incredible thing. The concept of decentralization, it's wonderful. Thank you both for being on my show. This has been so exciting. Again, it's TJ Miller. This is my camera. It's TJ Miller for CoinDesk Live here at the Injective Summit in New York City, downtown Manhattan, in what appears to be a bank that is centralized.
We're going to take a quick break. We'll be right back.
And that's a wrap, guys. Thank you so much for coming on the show.
Thank you.
I really appreciate you. Thank you so much.
Welcome back to CoinDesk Live. We are coming to you from the Injective Summit, and we are just having a ton of fun here at the desk. This is the event where traditional finance and crypto come together to redefine the next chapter of global finance. I'm Jen Sanasi. Ben Schiller is here. Ben, are you having fun?
I really am having fun. And that last segment was pretty
The last segment was super fun. If you didn't see it, you can just rewind this video a little back and go and experience it, and then catch up to this
then they would
interview.
miss this segment.
No, they can just catch up.
Yes.
It's the beauty of a live stream.
That's right.
All right, our next guest joins us now, Head of Institutional Business Development at Dworo Labs, which is a core contributor to the Pith Network, Michael James. Hello.
Hello. How are you guys doing?
Good.
We're doing fantastic.
It's unfortunate I have to follow TJ Miller.
I know.
It's a tough act to
It is
follow.
a tough
Celebrity
act to
here.
follow.
Now we're talking about market data after TJ Miller. It's
Don't
pretty.
scream at the camera too much.
Yeah, the audience has had enough of that, I think.
Yeah.
All right.
It's a tough act to follow, though, so I'll try my best.
All right, we're going to talk about there
There he
he
is
is.
again.
There he is.
Legend.
We can't get rid of him. All right, I want to talk about the Pith Network in just a second, but I want to talk about your background because you come from TradFi. This event is all about the convergence of TradFi and crypto. Talk to me about that transition for you. What made you want to come over to the dark side, if I will?
Yeah, or the light side. I spent the last 10 years, I just joined this company about 4 months ago. Spent the last 10 years at big banks like Goldman and JP Morgan, all the boring places. Always had to focus on electronic trading, fintech innovation. So my job was always, how do we figure out where innovation is happening, where's efficiency is happening, better automation, better execution, and that really brought me to the blockchain and crypto world. And you saw firsthand how blockchain is solving current issues in the legacy final market structure, where stablecoins, early adoption, RWA. But I joined the Pith Network because Pith is using blockchain technology to actually solve a huge issue and frustration that's happening in traditional capital markets, and that's the issue of real-time market data. It's a monopoly, it's tightly controlled and guarded, it's a $50 billion business where access is extremely limited, it's very siloed. We're bringing that same institutional grade market data on-chain, making it permissionless so DeFi can grow, developers can use that data to build their companies across any asset class on-chain.
$50 billion that market's worth. Does this give us an idea of how controlled it is and how is it controlled?
Yeah, there's a lot of frustration. Any bank, any hedge fund, any institution will tell you how frustrated they are with the market data, the monopolies. It's controlled by a few exchanges, the CMEs, NYSEs, NASDAQs of the world, as well as some of the data vendors, Bloomberg, FactSet, Refinitiv, et cetera. And so these guys, they raise their costs year after year. There's no justification because it costs zero money to produce and distribute data. Data vendors, they increase their prices for annual renewals, double-digit percentage year after year. Institutional budgets only grew 2%. So there's this huge mismatch. There's a lot of frustration. And so there's a lot of innovation to happen, and institutions have been waiting for a new entrant, a new startup, a new alternative to make this stuff better. And so that's what we're focused on. Market data is the most important thing in finance. Finance is just numbers, right? You can't do your job without market data, whether you're in the back office, middle office, or front office. And so, in our opinion, for DeFi to scale, for DeFi to be successful, you need that institutional grade market data. And so we're bringing all that, the same data that institutions pay all this money for, and we're putting it on chain. And now any application, any developer can use that data to build their app. They otherwise wouldn't be able to build their companies in traditional capital markets because, again, the burden of these costs and these complexities have become too much. And so innovation is highly stifled in traditional capital markets.
It's a barrier to entry.
It's a huge barrier to entry. The burdens of cost, complexities of legal work, it's just become too much of a problem. And so it creates this huge uneven playing field in capital markets, and where only the biggest institutions could afford to play. And now in DeFi and using Pith data, you have a great idea, a huge, interesting development. There's no need to worry about these entry costs or maintenance costs of paying this game for just to get data. And so we think that's going to bring a lot of value both on-chain and off-chain. So.
I know that you say you're not just putting data on chain, you're building a universal price layer. What does that mean?
For us, the universal price layer is the single source of truth of global markets and global financial market data. 24/7 in real time, the price of any asset class available anywhere, on-chain or off-chain, and available to anyone, whether you're an institution, whether you're a DeFi app, whether you're a retail person in a developing or emerging economy. You now have that data at your fingertips to be able to get capital appreciation to investment maybe you otherwise couldn't in the past, or use a protocol that's able to use some of these different financial instruments. And yeah, again, I think the innovation part of that, of getting access to new instruments, it's otherwise impossible in the traditional capital markets world. And so for us, it's about creating a better, more open, inclusive economy through this real-time data. And we think by doing that, it's a betterment for the entire global market system.
Can you maybe give us an example of a particular area of market data that is closed and therefore inefficient?
Yeah, I mean, you could take equities. Real-time equities data, like Google is a very successful company because they own the world's data, right? But there's a subset of data that Google doesn't own. It's real-time market data. Now you could go on Yahoo Finance and get a delayed feed at 15 minutes, 10 minutes, but there's no alpha there. There's no value in a 15-minute delayed feed. The alpha is in T0, right? The closest to zero, which is, in our case, sub 1 second in milliseconds. And because that data is not readily available, it's tightly controlled by these exchanges and these data vendors. Because they're the only ones in control, they have absolute pricing power. And there's nothing you could do about it because year after year, if you're an institution, you need that data. You need that data for your job. You need that data for compliance reasons. And so there's no alternative. There's no substitutability. So you have to keep playing their game and keep paying their costs year after year, and it keeps going up. So we are totally flipping the economy, the market data economy on its head, taking that same data and making it much more efficient, making it much more transparent, making it globally accessible and much more cost effective.
Now, are you displacing the data vendors that you mentioned, or is there a role for them in this? Because I think about some of the relationships with some of the incumbents that you mentioned, and I would think that those relationships are very strong and trusted, and probably have been in place for a really long time.
Yeah, so for us, like, the goal is not to displace one vendor here or get rid of one vendor here. For us, the goal is to create a more open and inclusive financial market, and that starts with creating the Spotify of financial data, right? Spotify is great because for the first time, it was very manual, right? You have to go to the store, buy CDs, or you have to download music here or there. Spotify, you pay a little bit of money every month, and you get the entire catalog of every album, every artist, every song, and that's what we're doing with financial data, which is, again, very siloed and very inaccessible. And whether we're replacing a vendor or working with a vendor, the way vendors work is they buy data from exchanges, they package it together, consolidate it across different regions, and then they sell it. So there's opportunity for us to partner with them. There's also opportunity for us to displace them. So we're excited.
Does that mean, I mean, it's interesting with Bitcoin, it's still not a kind of universal price for Bitcoin. You go to a different exchange, it could be a different price, there's a lot of arbitrage going on. Are you seeing a future world in which there will be like a single price for crypto assets?
Yeah, I think that's the responsibility that we're taking. And we take a fairly decentralized approach. So there's other market data vendors or even oracles in blockchain in the crypto space that they get their price feeds by using a third-party vendor API. They'll go to a CoinGecko, for example. Now, when you're using a third-party API, that third party is getting their data from elsewhere. So there's all this latency built in. For us, we have a very decentralized kind of setup where we connect directly to the top publishers in their given asset class. So crypto, for example, we'll connect to 50 to 60 of the top exchanges, from Binance to OKX to Wintermute to Selenium, the top market makers, and we'll take the aggregate, or we'll aggregate their prices together and take the median. And so we have a very verifiable price. We'll strip out outliers if you're 20% north or south of where that median is. And so we have a very trustworthy price. There's no, relying on trying to do arbitrage on one exchange versus the other. Everyone knows that the prices are coming directly from the owners of data, directly from the institutions that are actually trading the products.
Right. Interesting.
Tell me a little bit more about that. I mean, like, how do you verify that the data you're providing is accurate, the data you are getting is accurate, and cleanest possible data you can have?
For sure, and you could go asset class by asset class, but the approach that we take is we do a lot of correlation analysis, and we make sure that we're aligned. If you take equities, for example, we'll make sure that the prints are happening on, say, NYSE or NASDAQ, or the prints that are happening on Bloomberg or some of these vendors, we'll make sure we're 99.9% correlated to that price. And so we have the access and we have the ability to make sure we're monitoring that 24/7 around the clock. And also in equities, it gets complicated with the SIP feed. The SIP feed is the national best bid offer that's consolidated across venues. We're within the 99 to 100% correlation analysis. And so that's what makes it so trustworthy. It's directly from the institutions, and yeah.
All right, Michael, thanks for joining us at the desk. I think you did a great job following TJ Miller, honestly.
You did, yeah.
Well said. Thank you, guys.
That was the head of institutional business development at Dworo Labs, core contributor to Pith Network, Michael James.
And Eric Adams is up next. So I'm between TJ Miller and Eric Adams. That's unbelievable.
It's like a little sandwich.
Thank you.
back to CoinDesk Live. We are coming to you from New York City, where Mayor Eric Adams recently unveiled plans for a digital asset advisory council to bring fintech jobs, investment, and blockchain-driven public services to the Big Apple. The mayor joins us now. Welcome to the show.
Thank you, thank you. And fintech jobs, investment, and education. Because I want to build out a pipeline. Oftentimes when we have these new forms of investments, we leave out many demographics and community. And I want to incorporate this in my Board of Education. I want the children to know about this great technology for the future.
Tell me a little bit more about that. I mean, when you look at the city of New York, what demographics do you think could benefit the most from what we're talking about, blockchain-enabled projects or crypto?
Well, the entire city on a whole, but particularly when you look at, let's say, for example, my Caribbean diaspora, they send back large amounts of money back to their homes. And I was just in Puebla, Mexico, where they're sending money back. They're normally going through these money transfer services that they're paying a high fee. And so you have low-income New Yorkers that are taking a proportion of their dollars, they're going to taxes, and now you're being taxed again just to get your money back home. And so by educating them to using Bitcoin and other sort of cryptocurrency to transfer dollars, it is easy on them financially. And then when you go into paying for everything from summonses to your water bills, I believe we should be able to use one form of digital assets to do it.
So New York is the financial capital of the world, but it hasn't always been the crypto capital of the world. What are you doing to address that? How are we bringing companies back, crypto companies back to the city?
And I think it's a combination. It's a combination of being substantive and symbolic. The symbolism, I took my first 3 paychecks in Bitcoin. I knew how important for people to pause and say, wait a minute, I thought this Bitcoins were bad. But the mayor's taking his first few paychecks. With the financial capital, I wanted to lead from the front. But the substantive things that need to do, we got to get rid of the Bitcoin license. You know, that is really running businesses out of here. It was put in place under the previous governor. It was a wrong thing to do. And these great industries should not have to hide in secret to be able to do the evolution of paying for goods and services and transactions. And we want to use everything from bit bonds to other forms of paying for city services. I'm hoping one day you could get everyone could get their paycheck in Bitcoins if they desire without having to go through a middle process.
Ben and I were talking about the bit license earlier here at the desk. I know that that's something you've just said that you would like to get rid of. What's the process? What needs to happen for that to happen?
Great question. The license is controlled by the state. And what I believe, you have 50 million users of cryptocurrency, Bitcoins in our country. I think each one of the individuals need to get politically activated. Oftentimes people say, you know, I'm just trying to run my business, Eric. I'm not trying to get all into politics. If you don't get into politics, politics is going to get into you. And politics is going to do what we did 10 years ago by putting this this license in place. Is hurting the industry. So people need to know who their local electeds are. They need to go to Albany, lobby in Albany. They have a mayor and now a president is saying that, listen, we need to be open to cryptocurrency. We need to now locally get the laws changed and put the pressure in Albany.
So we're coming up to an election here in New York City for mayor. Do you think crypto will be on the ballot this year?
Oh, you got to put it on there, you know, and that's go back to what I was saying. We have a lot of people who are into cryptocurrency, blockchain. There's no reason we can't have our birth certificates, our death certificates, all of our records should be on blockchain. So during the season, during the debates, during the conversation, the people who want to push this agenda forward, they need to let all candidates know and ask the question, what do you stand on cryptocurrency? What are you going to do to make this a cryptocurrency-friendly city? And they can't answer that question, then if this is an important issue, you need to let them know about it.
So anyone who supports crypto should be supporting you rather than the alternatives?
I say that, well, I think everybody should support me.
You know, you mentioned putting birth certificates, death certificates, but public records on the blockchain. I know that in Buenos Aires they've experimented with that. Are there any cities you're watching here in the U.S. or outside of the U.S. that you think, you know, are doing a good job and you'd like to replicate some of what they're doing here in New York?
El Salvador. I think El Salvador is leading the way. We have a long way to go in America. We made it hard. I am blown away how we took an entire industry and we basically demonized and criminalized it. We made it fearful. Everyone had to live in the shadows. And the evolution of currency has changed. I mean, we used to exchange things with seashells, for God's sake. You know, went to coins, went to paper dollars, went to credit cards. Now my son says, you know, Dad, cash at me. What are you talking about? You know, so the evolution is here. We need to embrace the evolution and not criminalize it and demonize it. So many people have lost so much for confiscation of their Bitcoins. We've treated this industry unfairly. And so it seems like the federal government is now, in the first 120 days, I think they passed something like 60 pieces of legislation that's looking at this. Now you have local municipalities and mayors are saying, okay, let's embrace this. And I started out in 2022 when I got elected. I'm not seeing a movement anywhere in the country. New York must lead the way. We're the financial capital of the country.
Okay.
You know, Ben and I were talking earlier about New York once being, you know, the place where crypto companies wanted to be. Many of them left. Now we're seeing companies like Injective again come back to the city. How do you plan to attract crypto companies back to New York City when there are hubs like Hong Kong, Dubai, Singapore that are all vying for the same company?
Right,
Wyoming.
right. You know, I like to say that there's two types of Americans. Those who live in New York and those who wish they could. Everybody's coming back. You know, all we have to do is be inviting, safe, a great place to educate your children. I mean, our social life and nightlife is the best. A lot of our younger grads are coming here. This is their first stop. This is the tech industry. If you want to meet your mate, you want to be in New York, you know.
The taxes are terrible here, though.
No, they are. Los Angeles and New York, some of the highest taxes. And so there are those who are running for mayor that wants to increase taxes on people. When I say, no, we need to do a better job with our money, like family members are doing every day. If families have to balance their budget and make smart decisions, government needs to do the same.
So when you took your salary in Bitcoin, did you keep it in Bitcoin or did you convert it into dollars?
I was wondering that too. Thanks for asking.
No.
Or something
when
else.
when I first took my 3 paychecks in Bitcoins, everybody laughed at me. Now, who's laughing? I am. It's still in Bitcoins.
So it's gone up a lot, hasn't it?
Oh, what?
Yeah.
Since those first 3 paychecks, have you do you have a strategy? Are you dollar cost averaging? Are you putting some of your paycheck in Bitcoin still?
My financial advisor is handling that. I want to put more in Bitcoins. I think that this is the way of the future, and that's why it's important to take everyone with us. I don't want to leave those communities that historically been left behind with this technology. Everything from artificial intelligence, blockchain, Bitcoin, we need to embrace this holistic approach. And I just want my young scholars to be talking about this and be energized about this new concept. And they're afraid now. You know, people don't even want to engage in this because they feel like no one wants to seem like they're dumb on something. But I think it's a way to make it user-friendly that our young people embrace it more. Nothing would give me greater joy if you go into one of our inner cities, underserved community, and you can walk in the store and you can purchase something you want using Bitcoin. Then we've done our job.
And it's a way of attracting people to the city as well.
Yes, without a doubt, without a doubt.
You know, I said at the beginning of our interview, you have a crypto advisory council that you're putting in place. When do you expect to have that council, and what kind of folks are you looking to put on that? Can you give us a few names?
Brock Pierce, I'm thinking about. I'm thinking about some of the leaders that have been here for a long time and we treated unfairly. We believe that many people came through this city and were real pioneers. We want to bring them back, but Brock has been a real advisor in this area.
He's one of the founders of Tether.
Yes,
yeah.
Yes. So our goal is to really bring back those giants and state that, you know, we need some of your vision and what do we need to expand and what do we need to attract companies here. So I don't want to reinvent the wheel, and there's a level of arrogance in government merely because you were elected, you believe you have the answers to everything. No, we have to find the answers from those who have gone this way already, and this is where we can make the inroads that are needed.
Mayor, thanks so much for joining our programming. Thank you.
Thank you.
Okay.
That was New York City Mayor Eric Adams. All right, Ben, it's just you and I here again. We've had so many incredible conversations today.
We
I
have.
mean, we just spoke to New York City Mayor.
I mean, this guy's a
Eric
star.
Adams. Wants to bring Brock Pierce to the Crypto Council here. You mentioned founder of Tether. It's interesting, I think, developments happening here in the city.
I think, I mean, it's great. Whatever you think about politics or politicians, I think it's great that these issues are on the agenda, and it's great that we're going to spend the next few months with crypto on the ballot, as Eric Adams was saying. So, whoever your political preference is for, it's great that we're having these conversations about the future of technology.
I think that is super important. We're going to continue having these conversations right here at the desk. We are coming to you from the Injective Summit in New York City. We're going to take a quick break. We'll be right back.
Make it, I think. I think TikTok's going to be big.
Yeah. Welcome back to CoinDesk Live. We are coming to you from the Injective Summit in New York City. Our next guest is at the helm of Sonic SVM. This is the first chain extension on Solana for games, applications, and the industry's first TikTok app layer. Chris Zhu, welcome to the show.
Thank you for having me again.
Yeah, thanks for being back.
Good to see you guys.
We talked to you in Hong Kong.
Yes.
For our audience who's watching now who maybe missed what happened in Hong Kong, talk to us about how Sonic SVM works.
Yeah, for sure. So Sonic's essentially three things simultaneously. We're the first chain to launch with, a Solana virtual machine. This is before everyone followed with the SVM narrative. And then we are also a giant ecosystem now, over 20 different countries, really growing vibrantly. We're really big in Asia, in Korea, in Shanghai, across the entire world. This is where we see the geopolitical landscape kind of shifting a little bit, with US obviously taking the helm here, the geopolitical power kind of shifting back as well, especially in crypto. Super exciting times. And then, lastly, we're also a tech-focused infrastructure that is just shipping the real-time applications as well as real-time perp dexes, building the financial applications on top of Sonic. So, it's been a couple months since I last saw you guys. A lot to share. Yeah.
Chris, I'm interested in how the tide has been shifting towards Asia.
Yeah.
Just the amount of energy that was there since we saw you. Sure. I spoke to Gabby Dazan from YGG last week, and he was just talking about how popular gaming is really becoming there, and how different it is from the US.
Right.
Whether across finance, gaming, and the sort of social fi that you're working on. So just give us a sense of why you think there's so much energy happening there, and what can we learn from it here?
Yeah, I think there's a little bit of a shift. When it comes to the US, there's the intersection of TradFi, crypto at the same time, and we're talking to a lot of institutions here at the Injective Summit. But in Asia, I think it's very practical, right? Everyone is very pragmatic about what crypto is used for, which is for stablecoins, for payments, for digital assets. So everyone's really thinking about what is the new asset I can buy, I can purchase with my crypto. And gaming is obviously, an overarching one, and then social as well, where there's an amplification of all of these assets through just very natural means of communications. But really, what we're doing, and I think we briefly touched upon this in Hong Kong, is that we built a TikTok app layer, and now it's expanding to Meta, expanding to Instagram, expanding to YouTube, where this social app layer allows crypto users to earn get airdrops and then also play games and buy assets through this internal application. So we're not just looking at governmental regulation, we're also talking to Meta, we're talking to Instagram and TikTok about what they allow in their applications as well. And in Asia, this is one of the largest initiatives that we're pushing.
I want to build on the geographical conversation.
Yeah.
You talk about this TikTok app layer and being able to enable folks to I guess do different things on social apps, right? Incorporating the financialization of digital assets. Why do you think that is taking off more in Asia than it would here? Is there something culturally that's happening? Tell me a little bit more about the user base.
Yeah, for sure. So one of our largest trader groups is in Korea. Korea is also super highly adoption when it comes to entertainment applications, but also when it comes to crypto trading. So they're feeling very comfortable when you blend those two things together. In the US, when we see products like Pump.Fun and also a lot of trading application, the traders are there just to trade, right? It's almost like a financial activity to them, where like the entertainment aspect and the financial aspect are not blended in as much. They are competing for each other's attention or the time, so to speak. So that's why I feel like when we're in Asia, people tend to be more comfortable, going on to an entertainment application and then also seeing digital assets on the side. Whereas, here we've seen more strictly financial applications do really, really well. And that just, I guess, how the culture has shaped the two different sides of the table.
Chris, 2023, 2024, there was a large conversation about not needing to be full Web3, right? And it was sort of the Web 2.5 conversation.
For sure.
Right? I think that with what you're doing with Meta and with TikTok, you're sort of trying to bring that to life.
Yes.
Right? How do decentralized systems like what you have work with these centralized social networks?
Right, and I think the Pith guys were just here talking about what they're building in terms of the financial oracle. It's essentially taking off-chain data feeds and then putting them on-chain in a verifiable way. And I think that can actually be made analogous to a lot of different social applications as well. Impressions, likes, views, all of these data metrics actually turning to value in the traditional Web 2 world as well. Right? In YouTube, if you have 1 million users, 1 million views, you are looking at an ad revenue that's pretty sizable. And more we've seen that being kind of taking the helm of how advertising is spent. But where is Web3 kind of coming to play here? It's really about taking those metrics and putting them on chain, where in Solana, there's something we call verifiable program invokes, where you can take a look at certain numbers or certain programs on Solana and see how many people interact with them. And if we can track that very, very accurately, then we can actually distribute rewards, right? Whether it be advertising or just token rewards back to the users who's bringing attention back to our application. So if we have a TikTok page or a TikTok mini app and our applications are growing their follower count as well, then we can share a bit of the profits or a bit of the sequencer fees, such and so forth, back to the users. And Solana is so validator focused, right? All of the economics is going back to the validators. A lot of the applications that we work with want to bring attention, retail users, but they also want a bit of a fee share based on the sequencer fees. So that's how the economy kind of flows between the social applications and Web3.
I'm curious about Solana itself. The Solana ecosystem has become known for meme coins and Pump.Fun and this real financialization of everything. And we talk about users in Asia being able to use this beyond that, right?
Right.
Operating in the Solana ecosystem, has that deterred users in any way? Have you heard that feedback?
I don't think so. I think not at all, especially over the last year. Since we've talked, we've seen a lot more real-time consumer applications kind of come out on Solana as well. You've seen something like time.fun that allows people to trade their time and really let the market determine how much I should spend for Anatoly's 1 hour of time, right? And these applications are actually only possible on Solana for two different reasons. One is that the retail consumer users are there, and then the second is the developer ecosystem for SVM is so vibrant that they're kind of just churning out these social applications left and right, and they're finding new use cases. And that's also why we're working with Injective on Injective's SVM for the specific reason that there's a bunch of Solana devs or SVM devs that are now looking to different ecosystems, trying to deploy on different ecosystems and building what they need, right? For Injective, it's very much the real-time financial applications, but the Solana builders also want to come here. So we're building the bridge between these large, giant ecosystems and get the liquidity as well as the devs, over both of the sides.
Chris, I'm interested in, as we look towards an AI future, both crypto and social have a little bit of a problem with the bots.
Yes.
All the people who are trying to gamify the system.
Yep.
How do you work on any kind of proof of humanity to know that there aren't just machines somewhere in Thailand that are just trying to take all of your money?
Yeah, I see you talked to Gabby recently. Probably one of the problems on his mind for sure.
Yeah.
We actually think about it a little bit differently. We think about how do you work with the bots, right? How do you accept that there are going to be millions of bots and they're just going to be everywhere? How do you have a symbiotic relationship with the agents, right? They used to be bots and now they can do really complex things. So one of the projects that we've recently started building is called Donut. It's an agentic browser that allows the agents to actually just use the browser over a virtual setting. They can open 10,000 different web pages and then retrieve information from all 10,000 of those pages. And you'll foresee that there are some applications now will go extinct because the bots can just do everything for you. For example, if you have an airdrop campaign that requires tens of thousands of logins, now they're obsolete because the agents were just going to go and do that. But if we can actually get the agents to go on different portfolio pages, different financial applications, they can rebalance your portfolio for you. You don't have to open 10,000 different tabs and look at the APY across left and right. You can actually get the agents to do that themselves. So we're thinking about building the agents that's able to do that instead of forbidding the bots, to prevent them from interacting with the protocols.
I just want to push back a little bit on the idea, again, because you're working with TikTok and Meta.
For sure.
That's where my head is at. Those are two companies that really make most of their revenue on advertising.
Yes.
If it's just agentic bots that are consuming all these pages, then there's no one to advertise to. So do they have to also change their models to rethink this world?
For sure, and we've seen them starting to cannibalize their own business, which is always the best way to be cannibalized. Meta's recent acquisition from Scale, obviously, spending a lot of money to acquire the top talents. But similarly, you've seen OpenAI with their Operator, which is a virtual browser. Manus AI just got invested by Benchmark. So all of these virtual agentic browsers are actually coming to play. They're almost like the Ethernet of our age, where we're using the Ethernet to interact with the web. Now Agents is using the browser. So the fastest browsers, the best financial browsers is going to win this game. And we're there on that.
Chris, thanks so much for joining us. A fascinating conversation. It was wonderful to see you, and I'm sure we'll see you around the event.
Yeah, thank you so much for having me.
Thanks, Chris.
Thank you.
That was Sonic Labs CEO Chris Zhu. We are going to take a quick break. We'll be right back. Welcome back to CoinDesk Live. I'm Jen Tanasi, and we are playing musical chairs here because Andy Bear is back with me at the desk. Joining us now is Head of Trading at Canary Capital, Josh Olszewicz. Hey.
How's it going?
Not bad. How are you doing?
That was a great pronunciation, by the way.
It was?
It was.
I really pride myself in pronouncing people's names properly, so thank you for having a complicated name, and thank you for complimenting me on the pronunciation. All right, we are here to talk about markets. Talk to me about any indicators or signals that you're watching right now that you think we're maybe not paying enough attention to.
Sure, I'll go directly into the weeds, into the deep end.
Do it.
Right now, there's a great signal for BTC, technical analysis, potentially cup and handle, potentially inverted head and shoulders. There's maybe 5 people who are listening who are going to know what that is. But both of those things lead to bullish continuation. And most importantly, we're seeing it across all markets right now in the SPY, in the NASDAQ. Look at Dell, look at Rocket Lab, right? Like, it doesn't matter what the underlying asset is. That's just where we're at right now in the market. Keep that in mind. Bitcoin is poised to go higher, so consolidating up here is very bullish.
So that's a technical price-based signal just on Bitcoin without taking into impact market factors, right?
Correct.
Okay,
Correct.
so let's see if we can back that up or challenge it with a macro. I know that
Sure.
you and your firm watch the U.S. yield curve very closely, and inversion, unhealthy conditions, potential for recessionary kind of signals. I guess the last time I checked in with you guys on that was a couple of months ago. How are you feeling now about the U.S. economy?
I think the economy is strong. I think there's some issues and cracks in the job market. Today we saw, I think, unemployment initial claims, new cycle high.
Yep.
There's some cracks even in the unemployment number. If you go to like the third decimal point, over the past 4 or 5 prints, we're seeing a slow creep. The Fed's not quite there as far as getting concerned about it. I think 4.4, 4.5 is their level, and we're around 4.2 on rounding. So there's that. And then the yield curve, as you mentioned, looking at the 10-2 yield curve historically, again, another market signal, but what it has shown us is to expect a recession 12 months after the re-inversion of the curve on the 10-2, which would bring us to about August.
Right.
So we do have cross currents, is what I'd call them. We have headwinds, we have tailwinds. There's a massive liquidity tailwind, but there's also some issues we're going to have to work through. There's a regulatory tailwind as well. We're getting all sorts of clarity from the SEC on all sorts of crypto products. We're seeing a lot of these older cases get dropped by the SEC, right? So that's certainly helping as well. It's going to be interesting. Q3 also seasonally is a weaker period for Bitcoin. July is a good month. You know, it depends on how deep we want to tease this apart, but absolutely, the yield curve, we're going to have to contend with that eventually.
What's it going to take to get the 10-year under 4%? And if we continue to not be able to do that, that's a tough one for Bitcoin unless inflation expectations remain high. How are those things weighing against each other right now in the expectations space?
Sure. You know, we don't want to live like in the middle of the fear zone, which is like 4 3/4. We either want to be at like 5, where that's all hell breaking loose and yield curve control and everybody steps in with liquidity, or we want to be closer to 4. And what's going to move the needle, obviously, like you said.
$2 trillion in stablecoins?
Stablecoins should help.
Yep.
Is Scott Bessent going to move to the Fed chair? There's another that may help. I don't know. I don't know where the market's at with that as far as expectations and signals, but a new Fed chair coming is definitely something people are going to have to start thinking about.
Right.
On the 2-year yield, I mean, that's within the wheelhouse of the upcoming changeover in staff there.
I want to talk about Treasury initiatives. We talked about it a little bit at the top of the show here. These corporate treasuries make sense of what's happening there on the back of what we're talking about.
Sure. So I think you're seeing a lot of companies see MSTR, see MetaPlanet. More importantly, it's not just one example, it's many examples now, it's globally now. So you're seeing a lot more companies jump in and say, okay, is this idea right for me, for our business? Some of it is PR, obviously, you know, to get your name out there for companies that we may not have heard of, that may or may not help the price of their stock or equity or whatever. From a trading perspective, for me, I'm excited about 2026. I'm excited about 2027. Do we have a bunch of sailors out there who are just going to hold till their last dying breath, or are they going to find some religion in a bear market? And are we going to see a drag on crypto from that? I think I'm more in the latter camp, but the jury's still out on what that's going to look like. But it's obviously super interesting what's going on.
In the extreme, do you think that I mean, Bitcoin's been very unvolatile lately, and when you think 5 to 6% is held in ETF trusts right now, between 2.5% 3% is held by a strategy, and as these treasuries start to go, more and more Bitcoin is being held in a steady state, unless the religion gets hit, right? So does this create a tail condition, or does it create lower volatility but higher skew? What's your view there?
A great example of what we're seeing now, I think, is what we saw with the ICOs in Ethereum in 2017. Leading into that, everybody was raising, they were taking ETH, you were sending it to these companies, and they were holding it for a period of time, maybe, or selling some of it. And then what we saw in 2018 was, the aftermath, right? For Ethereum specifically. So that's definitely something that we at Canary are watching very closely, is on the hedge fund side, that we're trading some of these assets, not currently, but in the future, looking for discounted assets. That's really what we like. But definitely something to keep an eye on, and everybody's watching it. It's not just MSTR anymore, right? There's a whole slew of these that are going to get some interesting volatility if a bear market hits, right?
Canary has a bunch of ETF filings. We know you can't talk about them in depth. Let's pretend they all get approved and they get listed and they're off to a great start.
It's a busy day for me.
A busy day. Put on a pot of coffee. What should folks look at besides inflows to get a sense of how energetic the start's been? Has it been trading volume? What other things are going to be public and easy to watch? Tell me what kind of volumes you expect to associate with successful launches, and do you want all of them to be successful, or are you happy if a couple of them do super good?
You want all your children to do well, right? Inevitably, it may not happen. So we're prepared for that. We're prepared for all. It's a big tent. Everybody, with the trader, the holder, the investor, the long-term thinker, thinking about some of these products. For me, when I look at the Bitcoin and Ethereum products, volume is, like you said, obviously important. Inflows, outflows, super important. Even on these leveraged ETFs, not a lot of coverage on those flows, but even those are seeing enormous flows. So I think for some of these alt ETFs, you certainly have to temper your expectations on what we're going to see out of the gate. Education is still a big issue with, if you're trying to get somebody to buy something, they have to know what it is first. And if you're selling them this, they're a little more hesitant, right? They're like, they really have to get it on their own first. So we're not really past that hurdle, I don't think, with a big pool of capital just yet. So our expectations are realistic early, but just like with the Ethereum ETFs, over time, as people get more comfortable with this stuff, as they get more comfortable with maybe staking gets online, maybe in-kind gets online, maybe we get basket products, right? We're going to see all sorts of fun stuff, potentially, after this stuff gets approved or not.
Josh, thanks so much for joining us at the desk. It was a pleasure.
Thank you.
Thanks, Josh.
That was Head of Trading at Canary Capital, Josh Olszewicz.
You guys are pros.
Welcome back to CoinDesk Live. We are coming to you live from New York City, where the Injective Summit is underway. Now, you'll remember at the beginning of the show, Eric Chen said that there's going to be some big alpha coming, and I said, yeah, it's coming later, and now it is here. Joining us is Head of Business Development for the Injective Foundation, Mirza Udin. Hello.
Thank you. Thanks for having me.
Thanks for being here. We've been waiting for 2 hours to hear what you have to tell us. So let's just get right to it.
Yeah.
We have Burn Auction, iBuild, and Injective Council. What do you want to start with?
Whichever one you want. We could start off with the Burn Auction.
Let's start with Burn Auction. What's going on?
So what's going on today? We basically announced a barrage of new news. One of the biggest things was, and we know this in crypto, a big meta right now is revenue. Everyone finally cares about what businesses should care about: revenue. Incredible, right? So Injective right now, what many people don't know, is one of the highest revenue generating chains out there, and the new Burn Auction is really designed to accelerate that. So we've always been burning tokens. We've burned about 6.6 million INJ to date. Now it's about how do we increase that and increase revenue. So what we will do from now on is create the Injective Revenue Fund, which will allow anyone to tap in and earn from that revenue. So if you're a normal community member, a validator, or a person at CoinDesk, anyone can earn from Injective and the revenue pool that we create. So it's really about that. It's about getting every single module that's built on Injective to contribute more revenue, so we can ideally become the top revenue generating chain. So that was the first big announcement, which will help not only the Burn Auction, but new ecosystem initiatives, or just growing the pie for everyone.
Give us an example. We are people at CoinDesk. If we want to earn revenue via the Burn Auction, how do we do it? Talk us through.
Easy. So the way it will work from now on, before it was a winner-take-all system, where let's say you have $1 million in the Burn Auction pool, and you'll have to be basically a whale to bid, because unless you have $1 million to bid. Now what we did is break that up into infinite chunks. So you can bid with $1. So let's say a pool at any one time has $1 million in it. We can size it up into as many chunks as you want. The idea is it will run as an auction, and there will be an arbitrage opportunity. So let's say the entire pool is worth $1 million, but about $900,000 is bid. So there's about $100,000 arbitrage. So if 1 million people bid, each of them are earning about 10% on that bid. And you can do that on a monthly basis. So that's the beauty of it, where Injective is generating the revenue, users are getting to bid, and users are able to earn from that arbitrage.
What kind of I guess personas do you expect to race in first? Is this going to be professional traders, or is it going to be?
I think it's going to be
enthusiasts.
To date, it's been institutions, because they're the only ones that have had the money.
Right.
But the reason we even built this is we saw so much demand from the community, where they're saying, hey, I want to yield farm. Right now, because of the markets, it's choppy, it's hard to farm yield right now, and it's not sustainable. How do we give people yield that's real, revenue driven, instead of minting it from thin air, from vaporware tokens?
Do you think this is a model that catches on, or what are you basing this on?
I hope so. So my big issue with crypto today is some of the biggest foundations out there, like Uniswap, they're generating billions and billions of dollars. And this is not a swipe at Uniswap. Many other foundations do this, but they're only getting wealthier themselves. The foundation members are getting wealthy. It's never really shared with ecosystem or the community, which is, in my opinion, anti-crypto in general, because it's about being open source and allowing everyone to come in. So I think it will hopefully catch on.
All right, we got to get to the next announcement. We have 2 more announcements to get through in 6 minutes. All right, iBuild. Talk to us about iBuild.
So iBuild is probably the most promising tech I've seen ever. So the reason we built it is we realized crypto is full of jargon, and no one knows what's going on. I run the business team, and sometimes I get lost in the weeds. It's like, okay, we have ZK and EVM and SVM and WASM and all these different words, and new words come up every week. But that's not how Web 2 works. On Web 2, you can go to something like WordPress or Webflow. I don't know if you guys have, maybe you have, and you can create your own website. You don't need to know how to program, right? That's how I built my first website. Try doing that in Web 3, it's impossible. You probably need to know programming. You need to be one of the best programmers. You need to spend millions of dollars building this thing and get it audited, and finally, after maybe 1 year, you get it live. That doesn't work. That doesn't allow people to come in or build in Web3, right? We talk about this open culture, but it doesn't work. So what iBuild is we looked at the biggest innovation in the world today, which in my opinion is AI. How can we allow for people to build new apps with text-based prompts? That was the idea. when we came up with the idea, our developer team was basically like, this sounds impossible. That sounds way too good to be true. So we spent the last year building this platform where you can pretty much enter in a text prompt where you go in and say, hey, I want to build a lending app that takes tokenized stocks as collateral. Right. And I can give it prompts, I can give it different UI features, like, hey, I want to be able to toggle between dark and light mode. I want an FAQ section that says this. And we've seen in production that you can build an app in under an hour using just simple text commands and prompts, which would allow, in my opinion, any community member to come and build, but also Web 2 to finally come in, instead of having to learn all this jargon or Rust or whatever new programming language we come up with tomorrow. So that's really it. It sounds simple in theory, but I think it will be revolutionary to allow everyone to do this.
You mentioned the audit piece. I'm just curious, if we have a plug and play system like this where we can start building Web3 apps in a really easy way, where does security come in? How is auditing being, I guess, added into the process right now?
It's a fantastic question. So the biggest issue we have today is most projects in DeFi, it's not really a secret, but it's the dirty little secret, most of them are not actually audited. And that has led to many security flaws. Every week we see hacks and issues. So what we did is we're working with our audit partners to embed them into this platform. So as soon as an app is about to go live, the audit company gets a notification. There's no way to automate audits. Audits take weeks and a month. That's the one process that it will still take time. So after you build this thing, it's basically like a funnel for these audit companies to get in touch with you and say, hey, we just saw you build this cool thing with iBuild, but let's get in touch. Let's audit this before you go live with it and people start putting in millions of dollars. But that's a fantastic question. That was the first thought we had as well, where if we lower the playing field so much, it's fantastic, but it can also lead to a lot of room for exploits. So there's two ways to go about it. One, we permission the actual deployment process until you get a check mark from one of the auditors, or we don't allow you to accept real money until you get audited. So you can see the app live, but it can only accept fake tokens or testnet tokens until you get audited. Fantastic question.
So essentially, I can wake up, look out the window, it's raining, say, I'm just going to vibe code myself a liquidity pool and just get on iBuild and just like give in the prompt.
It was very much inspired by vibe coding. A lot of our team members became obsessed with it.
Right.
I had no idea what it is. And then I looked into it. I was like, wait, even I could probably do this. But what if we did it for crypto?
Right.
So that's where the spark really started.
And are you looking to see kind of interesting, I guess you're going to, people's imaginations are going to be unlocked here. So you'll see probably a lot of similar, familiar looking things, but some new creations.
That's the goal. That's the idea. I think I've been in this space since 2017, which feels like a lifetime. Back then, I thought that was it. That was the top, but clearly not. It's been quite a journey. And my biggest issue with crypto has been there is nothing new, almost ever. Like if you look at the last big innovations, it's been things like AMMs, and people created a million forks out of it. It's been stable coins, and people basically created many replicas of it. Many people will disagree with me, but I want to see new things. And I think a big barrier to entry has been just the tool set that people have at their disposal, where you're not bound by constraints or bound by what's already built. So that's the hope, that people build new things.
All right, Mirza, we got 2 out of 3. The last one is the Injective Council.
Yes, so that's big, and that touches not product, but actually the business side of things. So what we realized is we at Injective talk a lot, and a lot of crypto projects do, right? They want to bring TradFi on chain or build the future of finance. But it only works if you're not working in a silo or a vacuum. It only works if you're actually collaborating with TradFi titans. How do you do that? It takes more than just having a meeting or a catch-up call. So what we decided to do, and we worked with partners over the last sort of 6 months to put this together, we created a body. You can think of it as almost a board at Injective. And it's composed of 9 members, with more revealed coming in the coming weeks. And right now we have some of the biggest companies out there, like Google, Galaxy Digital. So combining some of the best Web 2 players, but also the Web 3 players into this board. The goal is to have them not only join the meetings, but also steer our direction, just like you would at a Facebook board meeting. That's what's missing in crypto, where we're so decentralized and so DAO-driven that it's great, but you lack that expertise. So it's basically creating a funnel where these people come and work with us to basically steer the roadmap. Tell us like, hey, you're going out this chain upgrade, do it this way. Like we've seen this work at T-Mobile, so this will work. And then basically have them get their insights before we go live and give it to the community. So it creates a two-pronged process where it is the most expert-built thing. Let's say it's iBuild. We get their insights on how it works, run through questions exactly like what you raised, actually test it out with those companies, right, in beta, and then finally release it to the public. This creates a better auditing process, but also a better process via which we're not just building for the sake of building, but we're building something that real companies actually use. So that's how it was sort of thought of and how we built it.
So it's basically bringing different perspectives to the table.
Yes, and giving them an actual seat at the table, like allowing them to actually steer our roadmap and our strategy and direction. So that's the idea.
All right, Mirza, thank you for coming. Thank you for sharing that alpha. Thank you for having us at the Injective Summit. It's been a blast.
Of course. Thank you so much.
Thank you.
That was Head of Business Development for the Injective Foundation, Mirza Udin. All right, Andy, we are winding down here. That was a really fun 2 hours.
What a day.
It went by really quickly.
Absolutely did.
And look who's joining us here, Sam Ewan.
Oh, hello, hello.
Oh, hello, hello. Well, Andy and I have chatted a bunch. Sam,
Yes.
you were here for a hot second. Talk to us a little bit about your experience so far today.
Well, you know what I think is interesting
Yes.
is we are here on Chambers Street.
Yes.
We are steps away from the government center of New York City, steps away from the financial district. A little to the north is the cultural capital of New York, Soho. I think it's very telling that this is where we happen to be at this moment in time in crypto. And I think there's just something really nice about this whole year has been this feeling of crypto is on the verge of changing all the things. And I just feel like we're seeing that in real time as we walk through this big hall that we're in.
We are, Andy, you and I kind of talked about that when we were at the Ondo Summit. It's really like a depiction
We're going
of
to
the
where the adults hang out, right? And
the
decisions are made, and with buildings made of stone, and it's a good observation because this particular area, as you said, right between the municipal building and City Hall. I actually live down the street, so it's very convenient for me too, which was helped things out. But we are out of the dive bars and out of the East Village spots and into better places of funding, and seeing these kind of announcements where these three announcements were about sharing profits and about recognition that profitability is important. Second of all, kind of vibe coding new apps, so kind of democratizing the process of inventing new Web3 properties. And the third thing, it felt like you were basically putting some machinery around creating instantaneous virtual board meetings. So there's a lot of listening going on in the Web3 community, and a lot of recognition that things like audits and things like proper due diligence, things like getting a lot of advice from people who have, for whom this isn't their first rodeo, paves the way to success. And it's exciting to see it. It's really exciting to see it. Plus having a member of government here to show some support. So
not even support. I mean, Mayor Adams was throwing, the gauntlet down. Come to New York. Let's build. Let us help you. I'm taking part of my salary in Bitcoin. I'm still holding it. So that was a nice little moment. I think New York is the place to be in crypto right now, which is also lovely that we get to have so many of these happening here. We get to travel to Singapore and to London and to Miami, and there's an energy here that I think is unmatched.
That's right, and it wasn't always the case. I think it was underground and a lot of up in Connecticut from the VC side, but now actually on the activity side, a lot more here. Hope that it builds, right? Hope that it builds.
With Mayor Adams, we talked about New York not being the most friendly place for crypto companies for a long time.
Right.
Like we said, this is the second event we've done in New York. Mayor Adams was saying, he wants to leave that in the past. He wants to get rid of the BIT license. He's putting together a council that can advise New York on how to really be the crypto capital of the world. And it's kind of incredible to hear a US city saying that it wants to be the crypto capital of the world, and it's possible for it to be the crypto capital of the world. I think the fact that legislation is progressing, the fact that the administration is taking a very different stance towards crypto than the previous one, is coming to fruition at events like this.
But also, if not in New York, then where?
Right. If you're going to have one city leapfrog all the other cities and countries, you got to have a pretty
Which
strong
is no
city,
disrespect
right?
to Wyoming and some of the others who are doing the hard work. We all got to do it together. But for the U.S., this is where money matters most, and we're steps away from the New York Stock Exchange. Like it just all happens here. And even though this is all going digital, and I'm a big fan of network states versus nation states.
But you need the talent, right? You need the talent to be in the coffee shops and walking the streets. And you walk through Hong Kong and you're probably likely to bump into somebody from the business, right? And I don't think we're quite at that point in New York yet, right? But we'd love to get there, especially on Chambers Street. You can run into one guy. Anyway.
You just don't want to take the subway, I get it. But, I mean, I want to also thank Injective for bringing us down here. Yes. This is an amazing event. There's a lot of energy out on the show floor and the hall, and food was fantastic. The drinks are going to be flowing later, so I'm very excited about that. But I also want to thank you guys for always doing such a fantastic job.
Thank you, Sam, for also doing a fantastic job. It is such a pleasure. It was such a pleasure to bring our audience CoinDesk Live from New York City. You can find all of us here in New York. If you're ever in New York, maybe you might bump into one of us on the street. Thank you to Injective for bringing us to the Injective Summit and for allowing us to have all of these incredible conversations right here at this desk. This really is the event that brought TradFi together with crypto natives to talk about the future of finance. I'm Jen Sanasi, that's Sam Ewan, that's Andy Bear. Thank you for sticking with us. We'll see you